All right, we have the management of GNA Axles with us on, whether or not soft Capex is now increasing, the input cost trend at the moment, and what more they're tracking as well. Ranbir Singh is with us. Ranbir, good morning. Let's talk about Capex first, how you see that moving ahead, whether or not you see increasing Capex as auto demand is going up, so what the outlook is for the industry currently.
Morning. Thanks for inviting me today. Actually, the overnight sudden demand increase is there all over, basically from domestic also and for export also. There's a very strong demand from North America, European and Asian countries. So as far as in GNA is concerned, actually in last 2 years, we have done quite a large capex that was around 150 crores. And whatever capacities we have added in previous 2 years, those were quite flexible capacities, and we were able to articulate our flexibility for different segments of market.
Soft Capex as well, how do you see that increasing across the sectors? Do you see more capacity being needed?
Yes, definitely. But whatever capex we are doing now in next this year or coming year, that will be from internal accruals only. And basically, the large capex was required for the forgings. So that is a backbone of the company, which we have done already in last 3-4 years. So and this kind of capacity needs a lot of lead time also. From that angle, we are very much comfortable, and whatever debottlenecking is happening, and it is a continuous process on quarter-to-quarter basis. But as on date, none of our customer is with any gap of supply. So we are able to supply our customers, whether it's in North America or Europe or India. So we are able to fulfill their demands.
Okay, and auto ancillaries as well, Mr. Singh, are seeing increased export demand. Is that an important area for which the company is going to need Capex? What is the outlook here?
Actually, as I have explained, already we have done a lot of Capex in our forging area, which is the very long lead time area. But the rest of the Capex for balancing machines or debottlenecking, it is going on. And what we are, if you see the outlook of the company, since last 3 quarters, company every quarter we are surpassing our sales as the previous quarter, and it will continue. And as so far as visibility is concerned, in next 2-3 quarters, the visibility is very good, whether it is domestic front or export. So overall, this calendar year, I would say will be very good as so far as demand is concerned. On other end, there are a lot of challenges about the inflation, like input cost of the raw material, so which has gone up in last 5 months. It's more than 20%, so which is really affecting the bottom line also. But it is especially this quarter, recently they have increased the prices, steel prices, by 12 to 15%. And on other hand, demand is increasing. These are the real challenges for next 2-3 quarters.
Okay, fair enough. And given that you're talking about improved visibility on the export as well as the domestic front in terms of demand, can you give us some sort of a sense as to what the projections are by way of your overall revenue growth, the run rate at which you can potentially operate at for the year ahead?
This year, because of the Q1, it was totally washed out. So we will not be able to. We are trying to touch our previous year's top line. On other hand, we have done a lot of improvements to improve our bottom line. And there we have company has shown tremendous improvement in last 2 quarters. So as so far as coming financial year is concerned, the outlook is very, very good. I would say our company is not only depending upon the auto sector, we are depending on different sectors like tractors, off-highway business in our country, in domestic, which is really performing very well and demand is very strong. And in export, we are 70 to 80% our dependency is on CV market, which is again in North America class and other classes are doing very well. And for 3 quarters, we are having good visibility. So next year, we are very hopeful to increase our sales by more than 25 to 30%. I would say in a year 22. But 2021 will be sort of flat.
Okay. Just an extension of that point, Mr. Singh, do you also, think with input costs actually going up in the near term, prices will eventually go up as well?
Yes. As we have long-term contracts with our customers in North America and Europe, those are 5-year contracts. And part of the contract is that our steel, whatever variation is there in the steel, it is not immediately implemented. It takes 3 months or on quarterly basis. With North America, it is with their local index, metal index. So if our Indian and American prices are not simultaneously increases, so then some effect comes on our bottom line also. But company with the high volumes, we are trying to recover those gaps, so that our bottom line should be maintained.
Sure. One factor, Mr. Singh, is of course steel prices going up, but the other one is also availability of products. Is sufficient amount or number of products available for production, even if it's coming at a higher price?
Actually, the major consumption is of the steel, which is over 50% in our business, 60%. And as we are having long-term contracts, so we have back-to-back arrangements with our key suppliers, steel suppliers. So that much of material on priority, as we are having long-term relations with them also for the last 20 years. So they are supporting us from that angle. That's not the issue with GNA Axles.
Thanks so much for joining us this morning and taking us through all the latest developments there. We'll leave it there for now. Thanks for joining us.
Thank you very much. Thanks.